Thank you, Mr. Chairman. Mr. Watt, good to see my friend from Charlotte.
Good to see you.
You seem to be relishing your new job, and we wish you well.
Thank you.
Frankly, we want you to be successful. And as noted by our comments today, we share or have the concern that of what would come out of the current policies of easy credit that we believe was complicit in the housing crisis that we have just previously experienced. Mel, as you know, former Acting Director DeMarco, he proposed these increases for the guaranteed fees that GSEs would charge the lenders. And under your leadership, you've suspended the implementation of those increases. This last December, the CBO made a public statement, a report, that suggested how we should attract new capital into the secondary mortgages. And I could quote them. They stated, policymakers should continue to increase the 2 GSEs guarantee fees to attract new private capital to the secondary market, and that even a small increase in guaranteed fees from the present level would allow private firms to immediately compete for the highest quality loans. You've also stated that you want to find ways to bring additional private capital into the system in order to reduce taxpayer risk. Now, through your own decision, you've chosen to go against the former director, and you've chosen against the thinking of the CBO. If you are not willing to increase the guaranteed fees, what additional steps would you recommend to increase the role of private capital and to decrease the role and exposure of Fannie and Freddie and frankly, the American taxpayer?
Let me just put in perspective one thing. I've never done anything in opposition to the former acting director. I have the greatest amount of respect for acting director DeMarco
contrary to his
and the
proposal.
decisions. Yeah, so I just want to be on record as making that clear. And I've taken some abuse for that, for saying that, but I just sure. Have to say it. The primary means that we are using is to test different risk-sharing models. And they've been very successful. We have tripled, quadrupled the amount of risk-sharing we've done in the 1 year that I've been there. The enterprise has had a goal of $30 billion in 2013. We increased it in the scorecard to $90 billion and shot right past it before the third quarter was over of 2014. We've increased it again in the 2015 scorecard. We're encouraging them to look at different risk-sharing alternative models to do it, not just the ones that have already proven successful. We've encouraged them to look at whether it is practical to even go back and risk share some of the legacy book of loans. All of this risk sharing we've done essentially has been with new loans, the more pristine loans. So we are very active in that space. We are also looking at the G-fee question. The conclusion that you reached that we are not going to change or are going to change, I think is premature. We just don't know yet whether we're going to change it or not, and we're taking into account the study that was done, our own study, the input that we got to a series of very cogent questions about how G-fees should be set, what factors should be considered in setting guarantee fees. And when we come out with our report, hopefully by the end of this quarter, I think we'll add a lot of information. In fact, even in the request for input, we put a lot of information out there that people had never known about how G-fees were set.
Quickly, may I ask, you have suggested, or you've stated one of your policy changes is that you would allow these down payments to be as little as 3%. And you stated, well, there's other offsetting measures that you would implement. Would you give more clarity to what those are?
Homeownership.
Given that we believe that easy credit is, you saw the chart earlier, was a major factor in the current demise.
Very brief answer, please.
Homeownership counseling, mortgage insurance, private mortgage insurance, higher FICO scores. I mean, there are a number of factors that we are taking into account that would offset the lower down payment.
The time of the gentleman has expired.